I think the 2023 financial crisis has just gone global. That's another thing it has in common with the 2008 financial crisis. In fact, a lot of things are in common. I mean, first of all, the Federal Reserve created both of them, yet predicted none of them. And I began predicting the 2023 financial crisis in 2009. I just didn't know what year it was going to be. Now, in all honesty, back in 2009, I did not expect the second crisis to hit in 2023. There's no way that I thought we would make it this long. But a lot of things happened that I wasn't able to foresee 15 years ago to elongate the process. But the reason I was able to predict that we would have this crisis, of course, I couldn't predict precisely when. I mean, I'm not a god, right? I'm not clairvoyant. I just understand basic economics, which unfortunately most people don't, including all of the members of the Federal Open Market Committee, right? These guys are clueless. But the reason that I knew that the 2008 financial crisis was coming, and again, back in 2002, 2003, when I really first started warning about it, I didn't know it would hit in 2008 either. I just knew it was coming. But the reason I knew that was because I understood the consequences of the Federal Reserve's monetary policy mistakes. The Federal Reserve didn't know the consequences. They didn't even know they were making mistakes. And neither did anybody else. And so I warned and warned and warned, and I was a laughing stock. I got the nickname Dr. Doom. But at least I was out there. They had me on the mainstream media quite often to warn about this and then just make fun of me. But then in 2008, all these predictions that I've been making for years, they came true. And what happened was when the Federal Reserve and the government did everything wrong in 2009. In fact, they did all the wrong things I predicted they would do before the financial crisis. I knew that they had just sown the seeds of the next even greater financial crisis. And now, 15 years later, here we are. Now, another thing that the 2023 financial crisis has in common with the 2008 financial crisis is that when the 2008 financial crisis first began, nobody knew it was a financial crisis. Everybody in the mainstream media saw the early signs of the crisis, and they just dismissed it. I mean, I'm not even talking about subprime being contained, because that was 2007. I'm talking about later in 2008. We started to see the cracks early before the shit hit the fan, right? And when you got those first, clear-cut warning signs that this was a big problem, the media dismissed it. Okay, it's no big deal. It's an isolated event. The government will take care of it. Everything is fine. Buy the stock market. Everything is good, right? That's what they thought in early 2008. Now, a few days or weeks later, it was, oh my God, we need a massive bailout. This is the end of the world, right? So things change very quickly. And to me, it looks like that's exactly what's happening now, right? First, it's like, oh, this Silicon Valley Bank, oh, it's just a unique event. These guys were just a bunch of morons who happen to be running this bank. Everybody else is a genius. Just these guys were the only idiots, right? Inexperienced, didn't know what they were doing. Well, if they were that stupid, why didn't anybody know about it in advance? Why didn't anybody warn that we had a bunch of morons and incompetents running the Silicon Valley Bank? Why didn't any of the regulators do something about the incompetent people that were running this bank? The reality is, they're just as competent as everybody else. I mean, everybody else is doing the same thing. I mean, maybe not everybody. I'm sure there are some sound banks out there. After all, we got a lot of banks out there. But a lot of them have done exactly what Silicon Valley Bank did, of course, including Signature Bank, which is also failed. Here is another ironic, unintended consequence of the moronic decision to cover all of the deposits, including the uninsured deposits of Signature Bank and of Silicon Valley Bank. I didn't even talk about this one on my last podcast. But, now even other people are talking about it. But here's the consequence, the irony of all this. And this is why the government shouldn't be doing it. Or one reason. There are a whole bunch of reasons why they shouldn't be doing it. But when the government bailed out these two banks, it was a special exception for these banks because they haven't actually changed the law. The law still is that it's only $250,000 that's insured. But the government said, oh, this is an emergency. These two banks, I don't know if they're systemically important or however they designated it, but it's like an emergency. And so we're going to extend this protection to these banks. Now, it doesn't necessarily mean that any other banks enjoy the same protection. For now, it's just these two banks where we're going to cover all of the deposits. Now, here's the problem. Now, the government has said these two banks, these insolvent banks that were run by a bunch of morons, this is where you want to put your money. If you've got your money in any other bank, take it out and put it in this bank. That's what people are doing. Because if you have your money at another bank that does not have this protection, right? And then you have $2 million, $3 million, $5 million, why would you leave it there? Because if that bank fails, and of course it could, there's no guarantee that the government is going to decide to cover all the deposits of that bank. But we know already that if you move your money to Silicon Valley Bank or Signature Bank, the government's got you covered. So now what the government has done inadvertently is they've created a run on probably a bunch of solvent banks. Because now depositors want to withdraw their money from these better run solvent banks and deposit it into this insolvent bank that is now being run by the government. I mean, the government is probably the least competent of anybody to run a bank, but now because nobody can lose money in this bank, no matter how stupid they are, no matter what dumb things they do with it, because the U.S. government, the Federal Reserve said, don't worry, you'll never lose a penny in this bank. Well, how can the other banks that don't have that guarantee compete? This is the moral hazard. So now you basically have the too big to fail banks, and that's like a handful of banks where hey, I can put my money at JP Morgan, I can put it at Bank of America, right? Because the government will never let those banks fail. No matter what stupid things they do with my money, no matter how much money they lose, they're never going to fail. They're just going to have an open-ended flood of money coming from the government. So I can put my money there, right? Who cares how incompetent those guys are? Now you've also got these other couple of banks where, okay, these aren't these too big to fail systemically important banks, but whatever, they've already been designated by the government. You put your money in here and you can't lose. All the other banks, thousands of banks, they're all suspect. This is the opposite of capitalism. So instead of people sending their money to the solvent banks, they're sending them to the least solvent, most insolvent banks out there. This is what the government is doing. It is screwing up an economy they've already screwed up, and this is not capitalism. This is ironic or ridiculous, and I'm not making this up, right? Jim Cramer on CNBC, and by the way, of course, Jim Cramer earlier in the year was recommending that people buy stock in Signature Bank and Silicon Valley Bank. What are the odds of that? Two of the first banks to fail were on top of his recommended list, right? You got zero, you lost 100%, right? That's the only place now where capitalism supposedly exists, is if you buy stock in a bank and the bank goes out of business, well, then you lose, right? So at least we got that little bit of capitalism left, which is one of the reasons that these bank stocks are now getting killed, because people realize they're up on a high wire without a net. But getting back to what Jim Cramer said on CNBC today, he said that, we can't expect consumers, the public, to do any due diligence or do any research on banks, right? They can't be responsible. We can't say, hey, you guys have to make sure that you're putting your money in a solid bank, right? That's something that we just can't expect the public to do. We need the government, right, to do that. And I forget who was on with him, another anchor, and he agreed. Yeah, you're right. Yeah, this is something that we can't leave up to the market or capitalism. What a bunch of crap. You got a bunch of socialists who are the spokesman for this major financial network this is a crock. Of course we can let consumers judge the safety of banks. I mean, they did that before we had the FDIC. Do you think Americans were smarter 100 years ago? Well, actually, yeah, that's a kind of a dumb question. They were a lot smarter 100 years ago. But they have access to better information today than people had 100 years ago. So if you're your typical American moron, because you've been indoctrinated by the government-run school system, you can still figure out which bank to put your money in, assuming we had no FDIC. You don't have to have a degree in accounting or finance or economics. Look, Americans buy stuff all the time. People buy computers. How many people know anything about computers? I mean, really, can anybody program them? Are they computer science majors? Right? Do you know anything about electronics? Well, how do you know what computer to buy? How do you know what cell phone to buy? Or what, television? I don't know anything about how they work. I couldn't build one. I don't know anything. But I do a little research. I trust people who know more than I do. You have all sorts of consumer reports. You can go and, ask questions or shop around and figure it out. And the same thing would happen with bank accounts. Yes, you could be a complete moron, but you could figure out where you should open up a bank account. They would have consumer reports. They would rate banks. They'd say, hey, these are the safe banks. You want to put money in a bank? Trust this one. Or maybe you can look and see where smarter people are putting their money, right? Where's the smart money banking, right? It would be very easy for the free market to figure this out. For somebody to pretend that they're capitalism and then say that capitalism doesn't work in banking, it works with everything else, but the American people are too dumb to figure out where to put their money, so we're going to put the government in charge? What, the government's not any smarter. In fact, they're dumber. See, here's the problem. When individuals are trying to figure out where to put their money, it's their money. They got skin in the game. The reason that nobody does any homework is nobody cares, because that's the moral hazard of the FDIC. The government says, we got you covered. But if there was no FDIC, individuals would do a much better job of finding a safe place for their own money where they bear the consequences if they do a bad job than a bureaucrat, some faceless bureaucrat who doesn't even know who you are, and none of it is his money. He can be incompetent, he can be bribed, who knows? But it's ridiculous to believe that we need the government to protect us. We need protection from government. That's what we need. That's why we're supposed to have a constitution, right, that's enforced to limit the power of government, and we're supposed to be on real money. We're not supposed to have a Federal Reserve or a central bank and all this fiat money. We're supposed to have gold. We're supposed to have honest, real money, and if we did that, we wouldn't have any of these problems. Another idiotic thing that Jim Cramer said on CNBC today, he was talking about inflation, and he said that what the government should do to crack down on inflation is really come after these companies that are raising prices and make them feel like they're being unpatriotic, to really yell at them and publicly scold them for raising prices. I mean, what nonsense. They have no choice. They have to raise prices. Inflation is driving up their costs. If they don't raise prices, they're going to go out of business. Is that better, that these companies go out of business? How can one person have such little understanding of basic economics, yet this is their big expert who's giving everybody our financial advice? Talk about the blind leading the blind. This is almost like price controls, right? It's just not, instead of a law that limits raising prices, we publicly shame you if you raise prices. How dare you raise your prices? You're causing inflation. You're harming the economy. This is the worst possible advice or commentary, and you're getting it on, what's supposedly this premier financial network. Hopefully by the time this financial crisis runs its course, maybe that network will be out of business, although, they do give me a lot of material for this podcast. So for that respect, I guess I like having them around. But a lot of people are losing a lot of money because they're being led astray by all this propaganda, or no, it's not government, but just misinformation that is being disseminated on a daily basis.